We will start off this morning with a little bit of good news. Tesla is up and the momentum appears to be up. It was well down in the pre-market and it's reversed that and gone up a couple of points. And we'll give you that information, of course, at the end. Again, we'll take a look at how things are progressing. Also at the end of the day, for those of you who are interested, I didn't want to do this at the front because I figured this would be for those of you who are really into it. I will provide some of the specific issues that I think will drive the stock price of Tesla in the near to midterm. This will include Tesla-specific fundamentals, the general economy, the stock market, and the technicals. All four things, of course, go into making up a stock price, especially in the case of Tesla, which is buffeted by all of these things. All right. News. Tesla can't get electricity to the Berlin plant until March 17th. Not good. I do find it a bit ironic that it's an electrical problem, meaning, of course, caused by some ridiculous eco-terrorists. But it is a little bit ironic that electricity is going to be the thing that is going to cost Tesla, they're saying, $1 billion. Tesla's full self-driving beta is poised for a European launch thanks to an update in regulations by the United Nations Economic Commission for Europe, UNECE. Anyway, on Wednesday, they adopted a new regulation to approve vehicles with driver control assistance systems, finally allowing advanced driving assistance technology such as FSD BETA on European roads. The new regulation was adopted at their 192nd session in Geneva. The DCAS regulation establishes a standardized framework for systems that support a combination of driving control assistant features such as braking, acceleration, and overtaking, not just cruise control. The new regulation does not cover full driving automation, however, and still requires the driver to remain engaged and responsible for the vehicle at all times, in line with the capabilities of Tesla's current version of FSD Beta. To avoid driver over-reliance on such systems, the regulation stipulates these systems have to be designed to ensure the driver remains engaged with the driving task. Driver's hands must remain on the wheel. Systems shall monitor the driver's visual engagement with the road. Basically, sounds like what we have in the United States right now with NHTSA. Okay, the adoption of the regulation not only paves the way for the introduction of Tesla's FSD in Europe, it also allows Tesla to reinstate certain autopilot features that had been previously restricted. These features, such as requiring the driver to activate the turn signal to manually trigger what was previously an automatic lane change and limiting how far the steering wheel can turn while on autopilot, are likely to reappear before the release of FSD Beta. So, when can we expect Tesla to release Beta in Europe? According to UNECE, Tesla will have to submit an outline of the system's design to type approval authorities, So the exact timeline will depend on how quickly Tesla can pull together the required information and how long it takes regulators to approve. However, according to Telescope, a launch could come as soon as October in some European countries. So that would be good news. And who knows, maybe that's why the stock's up a little bit this morning. Anyway, once it's released, Tesla will have to monitor the performance of FSD Beta and provide updates, which they've been doing all along anyway. All right, let's see here. This is Randy Kirk, by the way. Like, subscribe, notify. Cern Basher will be coming later this day. He's got a couple of reports that we're talking about doing this morning and that we'll post a little bit later. Very unique and interesting. I think you'll want to see these for sure. Anyway, and then I believe Bradford Ferguson will be joining us as usual on Thursday night, although I'm not 100% positive because he's out on the road taking various drives through various cities as he goes across the country, testing out FSD and finding out exactly just, how good is it? Of course, we heard from two reports already that are both saying, oh my goodness, this is really making a tremendous, James Dama, for instance, saying 100 times less interruptions or less requirements to take over. Let's see, we had that BYD story on Tuesday when Brian White talked a lot about that was on Tuesday. Brian White talked a lot about the various aspects of BYD and how they are as a competitor. That following up on that, this morning we've got from Alojoh, ALOJOH on X, This analysis compares the cheapest Tesla with the cheapest electric BYD available in Germany. Verdict, the BYD is just 10% cheaper, but falls short by a significantly higher margin in all key performance metrics. 18% less range, less efficient, needs 18% more energy per kilowatt, per kilo, I think he meant watt. Accelerates 20% slower, needs an additional 1.2 seconds to 100 kilometers per hour. Accelerates 20%. Yeah, I said that. Comes with a rather low speed of 160 kilometers per hour. Not great for the Autobahn, and has over 1/3 less cargo space. All right, so there you go. Now, I don't know if that's a complete analysis. It only takes a look at some of the items, but those are items that people do care about. Market Watch says the number of Americans who applied for unemployment benefits last week was unchanged at a low 217,000, suggesting little deterioration in a strong U.S. labor market. New jobless claims have ranged from 189 to 227,000 a week for the first 3 months, very narrow range, a remarkably low level from a historic view. Economists polled by the Wall Street Journal had forecast the new claims at total 217, so they hit it on the nose. New claims from 2 weeks ago were revised up from 215 to 217. The number of people collecting unemployment benefits in the U.S., meanwhile, edged up by 8,000 to 1.9 million. These so-called continuing claims have risen steadily since last year, and a sign that it's taking people longer to find new jobs. It's important. The number of people receiving jobless benefits now at roughly the same level as before that pandemic. The Daily Mail says this morning, continuing on the same theme, U.S. worker productivity grew solidly in the fourth quarter. The government confirmed on Thursday, putting a lid on labor costs. Non-farm productivity, which measures hourly output per worker, increased at an unrevised 3.2%. So that's what it had come out last month when they did it initially, and it stayed at the same thing. Productivity increased at a 4.7 per rate the previous month. Now that was revised down from 4.9, and the original, the first time they did it, it was at 5.1. So that has been revised down a couple of times. It's advancing at a 2.6 rate from a year ago, rather than the reported 2.7 pace, within reason. Some economists have credited rising productivity for the labor's resilience, productivity increasing 1.3 in 2023, revised up from 1.2. Unit labor costs. The price of labor per single unit of output rebounded at a 0.4% rate in the fourth quarter. These costs were previously estimated to have risen at a 0.5% rate. Labor costs increased 2.5, revised up from 2.3. Now you see, we get all these different reports, and they all have different amounts that labor costs are increasing. This one is saying it's only 2.3, 2.5. These would be well within what the Fed is looking for. ADP is saying that the number was closer to 5%. And then we'll have the report out tomorrow, of course, which will give us what the U.S. government labor statistics are showing. Anyway, Market Watch also reporting the international trade deficit widened 5.1% in January to $67.4 billion. It is the largest trade gap since last April, and going in the wrong direction. It's just going like this, getting higher and higher and higher. This is not good for the U.S. economy in general. All right. What's likely to create moves in Tesla near and midterm? Not talking about catalysts. I'm not talking about even what I call market movers. This is the things that kind of overall are going to cause a general increase in the price of Tesla. So let's look at about a few of them. Number one, I think we can assume that all the bad news is now baked in. The lower unit sales, the lower revenues, the lower profits for quarter one are known, or they should be known by the end of today, by Friday, by Monday. We're getting close. Yes, there could be some other analysts that will come in and lower their price analysis, their quarterly sales and their quarterly earnings analysis. And yes, that could continue to eat away or have cause problems for Tesla stock. But I think that we're getting very, very near the bottom on that part. In other words, what people know or think they know about upcoming numbers. So then therefore, unless the final number that we get on April 2nd for total production in the first quarter is way worse than we think now, then the stock should be okay on the fundamentals all the way through the earnings report. It could and will go lower if there are price cuts in March beyond what we already have. If the Berlin factory cannot get restarted on March 19th and they continue to extend that out, or if the numbers on April 2nd are lower than the street is guesstimating, all of those things could start to drag the stock lower. Number two, the stock could go higher if the consensus starts to see more units getting sold in quarter two than in quarter one. So as we get into April and we start to see things picking up, that would certainly cause the stock to go up. Significant increases in the Model 3 shipments out of Fremont or the Model Y shipments out of Austin would also be big pluses. Of course, China's weekly numbers are always a factor. So if we saw any kind of, solid numbers from China, that could cause the price of the stock to go up. Number three, prices could go up based on normal catalysts like FSD Complete or Optimus videos, but they would need to be really amazing at this point to really bump the stock. I mean, we're talking about FSD really complete, okay? You know my definition. Either Tesla takes over responsibility and says that they will be liable for any accidents that happen when the car is in FSD, or somebody needs to drive the thing for, coast to coast through cities and everything else and never, ever have an interruption and sit in the back seat, okay? Number four, the stock market is a bit extended, though the broader market could make a move as tech takes a breather. So when are we going to get the broadening of the market? Some headlines are saying that we're getting a little broadening now. You can see a little bit here and there, but basically, no. It's still all about NVIDIA, Microsoft, Meta. We've got Google and Apple and Tesla all under pressure, but the other ones are all basically making up a huge part of the increase in the S&P, NASDAQ, et cetera. So could we see broadening out? If we see some broadening out, if we see the tech kind of settling in and other stocks finally getting some movement upward, this could cause the overall market, the overall attitude to change, and could cause Tesla to go up with it at the same time. At some point, the investment community might decide that there's a recession coming, and then there's plenty of room. There could be a 10 to 20% correction in Tesla, a 10 to 20% correction in the overall market, and Tesla could go with it, and sometimes even more. So if we're talking about maybe a 30% correction in Tesla, you're talking about another $50 a share. That's possible. All right. So, getting down close to that 100 could happen if we start to see evidence of recession and if the market corrects by 10 to 20%. Number five, any significant inflation or interest rate surprises on the upside would be a real shock to the overall system. So watch for the inflation numbers to start popping back up the other direction. I don't think that's going to happen anytime soon, but it could. There's all kinds of reasons why it could, but those are low risk right now, in my opinion. That's my opinion based on everything I'm looking at. Now, the thing I talked about the other day, commodities are extremely low right now, and commodities can start moving up. Oil has been in a range now for a long time. Some people think it could go from the 80 level, the West Texas level of about 80 right now, up to close to 90. That would be a significant jump, and it goes throughout the entire system. So that could be important. It could go past 90 for some reason. Oil always is going to be have a real impact. Jobs could get tighter again. The economy could be more positive right now than we think. And so jobs could get tighter again. That could create some more inflationary pressures. And then we could see some real problems. The stock market would not like that. All right. Multiple smart guys right now. Oh, let me just say here, number six, Tesla has pretty good technical resistance at 160. I don't look at moving averages. So if you do, could you mention something in the comments below about what you're seeing in terms of, 50-week and what all those moving averages? I don't follow all that stuff. So if you're seeing anything on Tesla with regard to those moving averages, that would be helpful in the comments below. So multiple smart guys. Number 7, multiple smart guys said Tesla is really a $300 stock right now. All right. Dan Ives, and just go down the list. A lot of folks think it's still a $300 stock. That would require some very good news in the guidance coming up in around April 20th, whenever they have that, the earnings report. We would require some very good news on something very specifically positive to get the stock to lure back some of the Tesla fans who have left the party. Now, let me know in the comments below, what do you think of these 7 points? Do you agree with the 7 points? Do you think that this is kind of, that we're probably now going to be in a range, 250 to 300, 300 plus a little, somewhere in that range, probably for the next couple of months, next 2, 3, 4 months, until we start to see some beginnings, like, for instance, Mexico being constructed, Reno really having walls going up, Berlin not having these problems with the eco terrorists anymore, production out of Austin, good production out of Fremont on Model 3, all these kind of things, and then Optimus improvements or FSD improvements, etc. In order to get back into that 300, we're going to need to see some positive underpinnings. All right. So let's take a look at the market. That's next. Let's see where we are, see if it's still up. Well, not as high as it was. So Tesla, though, is still up $1.38. It was up about $2, and now it's up $1.38. It is now doing a little of this. We have the Dow Jones up 158, NASDAQ 135 up, now up 129. That just moved, kind of a big move. S&P up 33. Let's look at the percentages. We have the percentages now. Dow's up 0.41, NASDAQ up 0.81, the S&P up 0.66. Tesla up 0.78, right in the same range, and the Magnificent Seven, all up 100%, all completely up. NVIDIA continuing up strongly, up another 20 points this morning, basically all up. And then we've got all the Cathie Woods up as well. So boy, an up morning on the equities so far. Now let's go ahead and check out what's happening with the bonds. We have got the bonds this morning down 2 basis points. Whoops. It took a minute for my phone to reset. The 10-year is actually up a half a basis point this morning. And that is not happening with the rest of the bonds, though. All the rest of them are down. So that is the inversion going the other way this morning. So we've got 5-year down, 3-year, 2-year down, a couple of basis points. The 2-month unchanged. And as I said, the 10-year is up at this point, 0.4%. Let's go on to oil. Oils, they're saying the inventories are getting a little tighter, and that gasoline inventories are a little tighter, but oil's actually down this morning, a half a buck. Still, though, sitting at 78.61. Boy, it's really been in a range now for a couple of weeks of like 76 to 80. Very, very narrow range. Natural gas down this morning, 1.4% at $1.90. We have got the yen is up. So basically, the dollar has been under some pressure for the last week. We have gold this morning up $2, but at 21.60, sitting right around the all-time high. We've got copper up 1% this morning. And then we have got Bitcoin down 77, that's 0.12%, sitting at 67,118, so very close also to the high. All right, let's see here. Going back, what is happening? Is Tesla continuing to stay up? It is still up, but now only 46 cents. Okay, so basically we're starting to see some downward. So the upward momentum is not continuing, and we're seeing that the downward momentum is also impacting a little bit on the rest of the market. So the equities were higher. They're kind of tending a little lower now. Not 100% across the board. It's a mixed bag. All right, that's where we are right now. We have got yesterday, Scott Walter did an amazing analysis. We took a look at not all the competitors. There's 21 competitors now. We looked at a couple of the new ones. We looked at Toyota's entry. We looked at what it really all means. What this company has this great new hand, or this company has got the humanoid working at 7 miles an hour. Another company has got the movement of the sorting up to human levels. Each company coming up with different ways and different solutions. And of course, what happens is everybody's going to feed off of those solutions and make improvements to their own products. It is a great story right now. If you didn't see that yesterday, I'll put the card right up here so you can go check that out. And as mentioned, later on today, we have Cern Basher, and we think we've got Mr. Ferguson coming in from somewhere in the United States to help to talk to us about his analysis, his observations so far on FSD as he's been out there testing it in all kinds of situations. All right, that's all I got for you this morning. It has been great talking to you.